The odd discrepancy right now between what Matt was talking about, the slowdown, between the data that shows that jobless claims are not picking up and the fact that people feel really bad. I mean, do you have a sense of whether it will take actually getting laid off for them to stop spending entirely, for that to actually crack the market in a more material way? Or do you think that this steady softening will eventually just bring us down to that soft landing nirvana?
Well, consumers have mixed feelings. For the most part, they're happy that they're working right now, but they are still very upset about inflation. And certainly when they look out 6 months from now, they have concerns about their incomes, employment prospects, and also business prospects. And so that's why we've seen some weakening in our consumer confidence measure. But when it comes to spending, we are seeing consumers pull back. Certainly, they're not buying homes, and once the Fed raised interest rates and mortgage rates shot up, the housing market responded almost immediately. We also saw that businesses stopped investing because the cost of capital was rising. And we see that consumers are pulling back on goods, and our consumer confidence survey suggests that they will continue to pull back on those big ticket items. The big question now is services. Can they continue to spend on services? And the thing is that right now, consumers have run out of that excess savings. So a lot of the trips and things that they're going on, the services they're consuming, they're putting it on credit cards. And we know that interest rates are very high for credit cards and the debt service is rising. So I think that this is all part of the plan and that we will continue to see consumer spending slow and that we'll probably have a bit of a soft patch this year. But as long as consumers are continuing to work, I think the Fed can continue to focus on inflation.
Dana, how well aligned is consumer confidence with CEO business confidence at the moment?
Well, CEOs are, I would say, cautiously optimistic. For about a year and a half, they were very negative. And then in the last 2 quarters, it ticked up above our 50 threshold in terms of optimism. But still, businesses are saying, look, we're not having trouble finding qualified workers. We're not laying people off. We're just holding on to people. But we're not looking to invest much. And the thing is that we are still facing high costs from labor because they intend to continue to raise wages to hold on to their people. But still, they're very concerned about a number of risks, especially the implications of the elections coming up and also a number of geopolitical issues. So I'd say CEOs are not as gloomy as they were last year, but they're still very cautious.